The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we wrapped up the week of trade on Friday, I'd call it stable to slightly lower in the grains and oil seeds. Cattle found a little bit of a reprieve from a couple of days of selling across the futures trade, and it was a fairly mixed day in the outside markets. So all in all, a fairly quiet end of the week, but a lot of headlines to explore throughout this market trade. Let's do that with Jim Emter from Van On and Company joining us here on Market Talk. Jim, it is good to talk with you again. How's things up in your neck of the woods there in central Minnesota?
Well, Jesse, a lot of rain up here. I mean, we got over an inch at this point. It's been a nice steady rain, a lot of good planting ahead of it. So all is good on this front, and the cooler temperatures I think will be welcome for those that don't love the heat. But let's be frank. I mean, the corn crop up here was planted well. The emergence has been quick. It's been very good. And now to put some rain on it here, a lot of smiling producers right now when they look at their fields, not so smiley when they look at the grain prices right now.
Yeah, that's a good point. And weather, of course, a big factor in these markets. And let's start with corn. I think that's a good spot for us to jump into this conversation today. And I'll just ask you, Jim, I've had this convo a couple times here this past week. This corn market just can't seem to find much in the way of support. We keep kind of leaking lower. Why can't this corn market rally right now, Jim?
Well, let's be real here. I mean, we've got a trend that's lower. So first, let's look at the technical process of this market and say, all right, we've had some nice run-ups. We've had two really good run-ups to this point when you look at the last 6 months. And right now we're on the downtrend trying to find support. And its friend, the wheat market, is also down in the doldrums. So when you get two markets like this that tend to falter, you're limiting news. We've got a great crop off the Safrinha corn crop. There were a lot of concerns about that market up front. I mean, we seem to be on the home stretch of bringing that crop home, albeit a little dry on the tail end. You know, that's going to be a big crop. We've got these technical breakdowns here. So you're looking at a market that I think is trying to find a bottom. And I think that should be encouragement. The issue is, I think a lot of times we put a number on it and then we got to be set in that number. This market needs to find its low. From our vantage point, 435, then down to about 410 are the two price counts here for July corn. You could argue 430 and 413 for Dees corn. And those are areas that I believe we're going to find a bottom. So I'm going to kind of give us a window of opportunity to say, hey, based off Van On and Company's opinion right now, that's where we think we can start to build out of here. But then the next step is to get a story. That story here 10 days ago was hot and dry. Oh my goodness, it's burning up. We're windy. We're drying down. We need a rain. Well, we got the rain now. For a lot of the nation, you're going to see 70% of producers that are very excited about this rain, and then 30% of producers that are far eastern Indiana, southern Indiana, into southern Illinois, Ohio, Kentucky, Tennessee, even Missouri. That's the 30% that you've got some issues right now that aren't making headlines that are going to come back if we turn hot and dry. And with NOAA coming out yesterday saying, hey, you know, hot, dry is the forecast for June, July, August. This story's not over, Jesse. We're just in the doldrums right now. It's always most bearish at a bottom, and I think that's the problem we've got right now. Let's hurry up and get it. I think that can come next week. I think it's going to be somewhere between that 413 to 430 area, and we're not that far away anymore.
I was going to say we are pretty close to that, maybe not quite there yet. But to your point here as well, something I think about in this market trade is seasonality too. And if I'm not mistaken, we kind of get into that post-plant June to July 4th timeframe. Isn't that traditionally a window where we could see a rally in these markets?
Yes, it is. You know, so we've got highlighted our calendar around May 19th is usually when we transitionally bottom and then start to see some possibly buying come back in. Well, what are we going to need for that buy-in? Well, we need to continue to see strong demand. USDA gave us a favorable report. I think everybody's disappointed that we didn't carry through, but this is a circumstance where weather trumps all, planting trumps all, and that's the headlines. Once we get this crop, you know, established, now we're going to need rains to continue, and that's usually what happens. We get these spring rains, they start to wane off towards the end of May, June, and then all of a sudden the heat cranks up and then you get the market's attention again. So that's when I look for a seasonal structure. And if we can get President Trump to master negotiate 80 new deals and maybe 15 of them imply countries buying more corn. Now your catalyst comes together in a seasonal time frame, and that's what we're hoping for. We need to see it all come together. Obviously, there was news out of the White House today that they're going to back off a little bit on their timeline here and start to indicate who's where, because according to their message, they've got 150 countries that have reached out trying to make a deal. We'll see the details as they come out.
Yeah, and that's another key piece of this as well, is these markets having to trade off of headlines like that, whether it be trade and tariffs, or we're watching the weather or economic news or news from the administration. That's another thing that's been a big topic this week, is the RVOs and this whole situation surrounding the EPA and more. And so let's segue into soybeans and talk about that. You know, there was all this talk that we were going to see these RVO levels by Memorial Day. And then here this past week, Administrator Zeldin saying, well, you know, sometime soon in the next couple of months. It just, and then we get things sent to the Office of Management and Budget from the EPA on this. There just seems to be a lot of mixed signals, and the soy complex really didn't like that this week.
No, they didn't. And I mean, when you start getting the rumor mill of a market that wants a 5.8 billion gallon to 6 billion gallon type blend, and we get a 4.65 leak through the rumor mill, the soybean oil just literally panics and says, oh man, now, I mean, Jesse, it's been 3 years since we've seen, you know, big oil, not just meat mandates, they've exceeded it. So, I mean, we need to remember, this is just a standard of how the RIN structure needs to associate. If they're not using it, what they're required to meet. But if the incentive's there, they're going to grind. And from the really soybean oil market into the biodiesel component, there's been a niche. And the other thing is big oil's had a hand in this. So it's much different than the ethanol plant, where it was driven by, you know, the corn producer of America. Big oil's, you know, they didn't make the same mistake. They got a hand in the biodiesel. And from my vantage point, you're going to see them exceeding these mandates, whatever it is. But again, on the initial knee jerk with soybean oil on a pretty nice rally, you get that bad news and we falter. And unfortunately, that brings the beans down with it, because otherwise, I mean, you know, you got a crush report that was a bit friendly to grind, a little bearish on bean oil as well. But for the bean market, you had a lot of things starting to go for that market technically, fundamentally. And then if we can start getting the funds to buy, that was the third dynamic. It's like, okay, hey, the seasonal's right around the corner. This could be an $11 market before you know it. And then wham, you know, we get that EPA news and bean oil's down limit, lock limit on 5-6 contracts. You know, we recovered a bit today. I know we're fading as we progress into the close a little bit, but at least we stabilized with the expanded limits. And again, we can come in here hopefully with a calmer head next week. But for the bean market, that wasn't great news on either front for the standards. But, you know, this is a sell the rumor by the fact, in my opinion, when it all comes to fruition, Jesse. And I think the bean market has a better second half of the year coming at it here.
I was just going to ask you, I mean, does this slow down this momentum that the soy complex, this bean market's been building here recently? It's felt like we've been getting a little bit of a bull fever, so to speak, in soybeans. I mean, does all this news halt that here, or do we still have a chance?
Well, let's come back to you know, the core technical price counts, because in my opinion, as long as we're above $10, you're not doing major chart damage. You start getting below $10, all of a sudden you got to start lumping beans into the corn and bean category of, oh man, what's happening here? We need to also understand that China and the U.S., yes, we backed off on tariffs, but now you need something of substance, Jesse. I mean, if we get that, I mean, let's not forget, I think it was around 590 million bushels that we increased exports from the 2021 into the 2019 into the 2021 season. And so if we even do half that, if we all of a sudden see 200 million bushels more demand out of China, even as Brazil harvests its largest crop in history, they may do that just to appease, to make sure their goods are coming into the U.S. And so the trade deal is a big component of the second half of the year. The weather is, and with the hot, dry forecast, I think that keeps Bull's Hope alive. What this has done is it stalls it for right now, and it puts us back in this trading range, from my opinion, 10.07 up to about 10.60. And we're just stuck here again for at least another couple weeks. I think we're going to break out to the top side as we approach those June days, but time will tell. If we ever break 10.07, then I've got to get defensive and say, hey, something's changing here. So that's why we like the parameters of saying, hey, let's frame this up. 10.60 or above, we're waking it up. 10.07 below, you know, hey, we need to say, hey, we misjudged this thing a little bit. It's breaking. And for now, I'm stuck in that range and leaning on a little optimism yet that we can break out to the top side.
We are having a conversation today with Jim Emter from Van On & Company here on Market Talk. Jim, how about that wheat complex? We had the Kansas Wheat Tour this past week. It seemed like they found pretty favorable yield potential. Some disease, wheat streak disease pressure was noted, but all in all, it felt like a decent tour there. And the wheat market kind of fell lower on Friday into the weekend. I mean, what's your take as you look across this whole wheat complex right now?
Yeah, I think a lot of people are trying to grab onto a bottom, and all of a sudden we get a 3-day reversal in Kansas City wheat. During the tour, let's look at this and say, while the tour is going on, we found 3 days of trade up till Friday where we were actually rallying on this news. So I don't think there's any question the yield is going to be there. I think there's quality concerns that are going to continue to plague this market. I'm a little concerned about some of the heat that's coming back in a week or so. Next week we're seeing some temperatures increase there. We're going to start to see a little more limited rainfall. It might cause it to fill a little quicker, if that continues into early June. But the truth be told, I think this is a basis game that's going to kind of clean this out to some degree. I really think you're going to see premiums for quality wheat. I think this wheat crop has been through a lot, but it got the right rains at the right time. It got, the right temperatures, to save it. And we didn't get that major freeze, even though we had 2 threats of it. I think this is a wheat market that's going to find a bottom here in the next, few weeks as we come in and approach harvest. I think it's pre-harvest that we find that low. And then as we come out, we start to build. But I think if you've got quality wheat, that's going to be in high demand. And I also think as we get some of these export deals, that's going to help wheat down the road. But to say we've got a bottom, I'm looking for somewhere between 503 and 470 to bottom this market. So yes, we bounced off the lows and great. I'm not sure that they're in yet, Jesse. I do have optimisms 3 weeks down the road, or unless we get a surprise. But just try to be careful. There could be another 20, 30 cents down at a minimum here yet to retest those lows. But usually I like to see a little better positive divergence between price and RSI before we call this a bottom at this juncture.
How about spring wheat? I know you work with a lot of folks up there in the Northern Plains. We're trying to get that crop into the ground here. Any differences when you look at the spring wheat complex and working with some spring wheat folks across the northern tier of the country?
Yeah, unfortunately, wheat has been slow to decline. If you look at what KC and Chicago have done, they faded harder than the spring wheat market, and partly because acres are going to be down. I really do think you're looking at 10.8 to 11.1 million acres of spring wheat. That's going to be something that's going to resonate back again towards the end of June. The concern was Western North Dakota was bone dry, and I mean dry, Jesse. And, they got 2 to 3 inches of rain through most of Western North Dakota. So now all of a sudden you're going to say, all right, if it's 10.9 million acres and we're starting to be a little more optimistic in yield, that all helps. I think a lot of the wheat crop got planted that intended to in front of this. Guys pushed hard. There was enough windows. We were dry enough. So unfortunately, spring wheat joins the party here. We probably get down between 555 to 570 off the September. We're 587 right now. I think you can set up a low on that and start to make a run, but I think this rain has limited the upside to around that 650 to 670 unless some new demand comes in or unless this is the only rain we get for the next 2.5 months. Otherwise, you probably just tighten up the range of this wheat market once we find a bottom.
All right, let's talk a bit livestock before we wrap it up here today. Cattle, I think, has been the other interesting story all week long. We had what was starting to look like a bearish key reversal in the trade Wednesday, Thursday for futures. Friday, rallying a bit, but still, I think a lot of folks in this cattle complex are nervous right now watching this market. What's your view of things here this week?
Well, I think there's reason to be nervous. Jesse, if I got $1 for every time I heard key reversal in cattle the last 6 months, I'd be a pretty wealthy individual. I mean, the thing is, we all know that these are record highs. So I think we're all sitting here on pins and needles, just waiting for this market to turn. And then we get these turns where we drop $5, $6, $7, $8, $10. And it's like, is this it? Is it over? And then all of a sudden we come roaring back. So let's come back to the base of this thing. Number one, unless the Packers need to get in a different spot, you can't have cash staying steady to rallying in a futures market break. It's not going to separate itself to that degree as much as maybe some futures traders want it to say, hey, I want the cash. Hopefully this market can drop $20 and that way I can maximize my hedges and sell strong cash. It's not going to work that way, in my opinion. So until we see this cash show some cracks, that means bigger inflows in from Mexico on feeder cattle. I don't think you can pause a feeder cattle market and expect it to come in here and move when you're taking 20,000 ahead each week and saying it can't come into the U.S. Now, in 10 days, if we resolve that, then that could be a little more negative to feeder cattle, because there's no question technically we're way overbought. But fundamentally, there's a reason we're here. And technically, when we come back, the fourth price count still exists, but they're $20 higher in live cattle. So from my vantage point, until the cash shows cracks, I don't want to get too anxious about calling a top. What I do want to make sure is that we're hedging marketing risks, because they are large, and one taste you should get is when it's over, you might see progressive days where we're down $4, $5, $6, $7. And I think that's what scares everybody. When we've seen the big liquidation in the past, we've seen markets lock limit for 3 days, 4 days, 5 days. And that's what's so scary about it, is we can change the course of the American cattle farmers so quickly by moving them from a profitable spot to not. And then you look at these replacement cattle. We're buying feeder cattle at what price? I mean, they're bringing them in at a loss on the books. The banker's having to write checks and say, yeah, do this, but make sure you're hedged. And then you've got to spend a premium on an LRP or put that assures you a loss, but hope to have upside. I mean, this is it's a concerning market, but cash is king. And I'm going to say, until that cash shows cracks, I'm really not going to sit here and say we're toppy or we're going to roll over. It's just the fear of that should keep you as a marketer. And that's the firm aggression that we got. When you've got profitability to protect, make sure you're protecting it.
I think you hit the nail on the head. Some good perspective there. I'll just say, too, real quick, we could touch on hogs. It just feels like that market, we got through some key resistance, $100 hogs, and now the market just seems a little skeptical. And I think some of that trade is maybe tied in with what's going on in the cattle trade right now, Jim.
Oh, I would agree 100%. And when I look to the hog market, I'm just going to flip over to a chart quick. I look at this hog market and the July activated upside price counts. Yes, you did not take out the highs, but when you basically got above the April highs, you got a little bit of a setback, and then we took those out. That's an activation of price points. So when I run fib extension on those, I'm looking at first and second price counts that get us up into the low teens to 20s. We're talking 120 second price count with even bigger ones than after what cattle just did. If you get a shift in protein consumption or deals with China, that's what wakes this market up. But for now, we can probably steady Eddie in here and follow suit and say, hey, 102 to 107, let's settle in there. If China demand shows, that's when you get to the low teens to 120. If we don't get that China demand and we break 100, you better be defensive. That's the approach I can give based off those price points.
Jim, any final thoughts you would leave with folks here today? Anything you'd reiterate to them as we close out the show?
Well, one thing we're preaching right now a lot is just be ready with the plan. I think there's a lot of layers of protection right now in the grain industry when you look at corn and soybeans, and even wheat for that matter. If you take crop insurance, plus you take the Art County PLC protection, plus if you added an ECO, SCO option, there's a reason to say, we've got a lot of our clients 20, 30, 40% covered, plus having all those bases on top of it. We feel okay with where we're at right now. But the biggest thing I stress is start thinking, if we're to bottom here in the next week or so, what are your price points you're going to market at? Because my biggest fear, Jesse, is if we look at some of the 2019 runs or some of the previous runs we've had, I think the summer runs we get this year are going to be quick, meaning they'll get up there, they'll get your price targets, and if you don't have orders working, you might miss your opportunity. So be ready with the plan. There's a lot of great analysts out there. We believe we're one of them. But again, find somebody that can help you pick those points and be ready with that marketing plan.
Jim, if folks want to reach out and have a conversation with you and the folks there at Van Ahn & Company, what's the best way?
Give us a call, 800-648-5494, or check us out on the web, www.vanahncco.com.
Jim Emter, Van Ahn & Company, always great to talk with you, sir. Thanks for joining us here on Market Talk. Have a good one, and we will talk to you again real soon.
Thanks, Jesse. You guys have a good ones as well.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.